Hi, Associate Dentist. So today we've got an announcement, HMRC announcement regarding the tax associates or tax status of associates. So I'm just going to read here from a tax website that I subscribe to, Ross Martin, and they say, as we all know, associate dentists are those dentists providing post-vocational who are post-vocational training, who are not practice owners. They work within a practice, paying a license fee for the use of the premises, the equipment. They will operate under a contract with the practice or practices they work for. Standard contracts are provided by the British Dental Association, BDA, who provide relatively high level of autonomy and control for the associate. Based on the standard terms of this contract, an associate will be self-employed on the basis that HMRC have provided a concession that associates are self-employed and their income is going to be trading. So up until this month, September 2021, it has always been known that anybody who is an associate dentist is going to have a default position with HMRC that they are going to be classed as self-employed. So what's changed? So again, just referring to Ross Martin here, recent reviews performed by HMRC into such contracts and the employment status of associates have found there are times when practice and associate agreement differ, or when terms of the contract are standard, these are not followed in practice. For example, an associate can have far less control and the practice owner will have far more control over how the associate operates. This means that the associate can actually be an employee when applying the general employment tests. As a result of these reviews, HMRC are withdrawing the concession from April 2023. Associates will be subject to ordinary employment status rules and will not be automatically classified as self-employed. So if we begin to look at this is an interesting development in the taxation of associates. So we have small biz accounts, many associates who operate with complete freedom to choose who they insure themselves with, their periods of holiday, who they train with, the equipment they use in their practices, and those type of associates are more entrepreneurial and have what we call the badges of trade. So they have the risks and rewards of being in business. But what we see more with a corporate, so I'm just going to mention Bupa or My Dentist as some of the bigger ones, we see associates operating in those corporations probably with a lot less freedom. So there may be financial targets, there may be pressure to use a certain type of laboratory for dentistry work. There may be pressures to use certain types of training organizations, and it's those type of arrangements where HMRC are going to be looking at and saying, if you are operating with a narrower window of what you could be, so for example, there's more less freedom to choose your insurers, to choose your training providers, then it's those type of arrangements that HMRC are going to be looking at and saying those are not being operated within the spirit of what we say is an associate agreement. Now, when you are self-employed, you get a huge array of tax reliefs and freedoms. Now, if I just give you the caveat or the detail about what the background is behind this withdrawal of the concession from HMRC is, over many years, basically I want to say the IT industry, but it has spun out into many industries where lots of people have taken advantage of self-employment rules. And when I say self-employment, I mean self-employed or limited company. And they have operated as if they were an employee of the organization. but have taken the advantages of the tax rules, i.e. sharing income with their wife or husband to benefit from lower tax rates, claim expenditure on business items that you may not have qualified for as an employee. And it's these types of arrangement that HMRC are really trying to weed out. And the piece of legislation that has come in recently, you may have heard of, is called off-payroll working. And what an off-payroll worker is HMRC will typically say, we're going to allow you to operate as a limited company. However, we're going to tax you as if you were an employee. So typically, an off-payroll worker would submit their invoice to the organization they're working for. The off-payroll worker is then assessed by the person paying them. So if they say, you are operating as if you are an employee of this organization, and when they make that payment to typically the limited company, could be a partnership as well, we are going to pay you, but we've got to take tax out of your payment, typically income tax and national insurance, as if you were a worker of our organization. And when you get paid like that, it denies all sorts of tax relief. So if you are sharing an income with your spouse, paying pension payments, paying for training, paying for equipment, any of that tax relief that you traditionally have enjoyed as self-employed or limited company is going to be removed. You're not going to qualify for that tax relief. So it's an important thing to understand. Now, there are some tools in place. One of them is CEST, which is a checker that you can go through and you can answer a series of questions. And when you get to the end of it, HMRC, who've devised this CEST tool, will determine whether you're a worker or an employee, or you're self-employed for the company. Now, I've done this for a number of associates, and it comes up with the result of inconclusive. Now, most of the associates I've worked with, I would say they are entrepreneurial. They invest heavily in their training. They invest heavily in their equipment. They have the risks and rewards of being in business. They insure themselves. If they're sick, they do not get paid. But this is an important industry change that I think most people will know if they feel they're operating as an employee or they're operating as a true freelancer. Now, I've got some guidance here from NASDAL, which is the National Association of Specialist Dentists, Accountants and Lawyers, and in their press statement of September 2021, they say Alan Suggett, the NASDAL media officer, said, despite the withdrawal of HMRC guidance, the consensus of NASDAL accountants is there will be no change to the self-employed status of the majority of associates. Associates and practice owners are advised to go through the online HMRC CEST tool that will check employment and status for tax. By carefully and honestly answering the questions, the majority of dental associates is likely to be that they should be considered to be self-employed for tax purposes. However, there may be a concern that for those associates working arrangements are subject to a higher degree control of normal. NASDAL advises to all associates, and particularly new associates, is to undertake the CEST test, which is anonymous, and retain a hard copy for conclusions arrived at. So this is an important thing here. What HMRC are looking at are associates simply operating with a high level of control. So as I mentioned earlier, if you've got the freedoms to choose your own laboratories, your insurers, your training, equipment you supply, when you take your holidays within certain parameters, you are probably going to be classed as a self-employed dentist. If you're operating under a high level of supervision where your hours, your freedoms for training, insurances, laboratories that you work with are removed, you're more likely to be classed as an employee, or rather an off-payroll worker. And if that is the case, then you are going to lose a lot of the advantages of being self-employed. So the rule is really have a look at your associate agreement, make sure that the terms and conditions are being followed. Follow the CES tool. I'll put a link in to my video. See what your status is. Share that status. If it's unconclusive, just screenshot it, PDF it, share it with your accountant, save it, and do it on an agreement by agreement basis. So if you've got a new agreement, or you rewrite your agreement, or the terms of your agreements change, so you're building up a history of your statuses. You're relying on HMRC systems to correctly establish whether you're employed or not employed, or if it's unconclusive, that's also a good indicator that you really can't be employed, because you can't be half and half. You can't be half an employee and half employed. So even if the results of these CES tools are inconclusive, I would suggest that that is good evidence that you aren't employed. Anyway, it looks like HMRC are looking at these agreements in more closely, but the thought of the tax advisors are who know about these things is, you probably, if you're operating under the BDA associate agreement and following the terms of those conditions, it's business as usual. You're probably going to be still classed as self-employed and have all the advantages, the tax advantages that go with that.